What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock once again. And right now, the entire stock market is absolutely exploding. We don't want to be chasing and FOMOing on those big green stocks today. We want to be looking for opportunity, and there is still opportunity in the SoFi stock right now. This stock is actually flat today. A lot of manipulation. We're going to be going into the SoFi stock. We're going to be looking at the Q1 earnings that just came out a couple of months ago prior to leading up to these Q2 earnings, just to give you a refresh on what kind of growth this company is having right now. And we're also going to be talking about why I believe Warren Buffett is wrong when he says regular people like you and me cannot pick out individual stocks. We're going to cover his thesis real. And I'm going to show you guys why individual stock picking can grow your money 10 times faster. And only if you feel this video gives you a better insight on the SoFi stock. Be sure to subscribe to the channel. I'll be keeping you updated daily with all of the updates on SoFi. There's going to be a lot of great information coming out and you don't want to miss it. And once again, if this video hits 400 likes, I will be doing a double upload on SoFi stock. And if you are investing in SoFi, hitting that like button is going to show this video to more and more investors. And that's going to give us a lot more heads watching and investing in this stock in the future. Guys, as we can see here, there's a lot of manipulation going on with the SoFi stock. They are shaking out a lot of weak hands, it looks like to me, heading into these earnings. I know there's a lot of talk about the lockup. I wouldn't worry about the lockup because regardless of when more shares are unlocked, you don't exactly know what the billionaire investors are going to do. You know, they might hold to earnings. They might try to drop this stock and rebuy. Just know that if the stock goes down to 11, 12, 13, you should be buying more on weakness in the short term because we're looking at a blowout earnings. So I would just gradually buy in slowly on these dips. Anything in the $14, $15, $16 range is a great buy. And as we can see here, the stock is red today, guys. Red. Look at the top of these indexes. Absolutely exploding. An index is exploding almost 2%. 2% on the Dow, 2% on the NASDAQ, 3% on the Russell. And SoFi is just getting left in the dust. Guys, this is the market today. Everything is absolutely ripping. And SoFi, if we look at the red stocks, the reversal, there's very, very few red. Look at this, guys. There's only 15 companies, 20 companies in the red. And look at that. SoFi, 0.7 in the red, guys. We are getting dusted today. And that just shows me that's another reason to be buying this stock right now on weakness because they just had blowout Q1 earnings. That's what we're going to be looking at today. We're not going to look at the investor presentation. I want to give you guys a refresh of the SoFi stock heading into Q2 earnings, just to give you more confidence investing in this company before these earnings come out. Market cap, once again, sitting at a 12 billion market cap. Revenue is at 1 billion projection this year. This is trading at 12x sales compared to multiple IPOs, 40, 50, 60, 70, 80x. I mean, guys, the SPAC route is giving you opportunity on some of the fairest valuations humanly possible in the stock market right now. This is one of the most expensive and high price markets we've ever been in a decade. So the thing is, you need to be looking for value. You need to not be FOMOing at these stocks, surging today, 5, 10 plus percent. Guys, look at what people are buying today. JetBlue Airways, Royal Caribbean Cruise Lines, American Airlines, Cruise Lines. It just looks like people are FOMOing into these reopening trades when these companies, haven't had any performance in a year and a half. They're already being priced to high prices and high valuations. And so it just looks like to me a lot of people are FOMOing, to these reopening plays, airlines, nonstop, airlines. Guys, I wouldn't be doing that right now. I would be buying on weakness. I would be looking into the red. I wouldn't be chasing stocks that are up 6, 7, 8%. Buying on red is going to always give you cushion, especially when the company is undervalued compared to Wall Street experts. This is the Q1 2021 summary results. This is what we're going to be looking at today. Guys, check this out. This is the members growth of SoFi Technologies. 7 consecutive quarters of accelerating year-over-year growth. If we just scroll down a little bit to the most 3 recent quarters right here, Q3 2020 had 74% customer growth. Q4 2020, 90% customer growth. In Q1 2021, 110% customer growth. Remember, guys, their marketing is spectacular, okay? They have one of the lowest customer acquisition costs compared to these legacy banks, and their biggest marketing tool has not even been used yet, and that is the SoFi Stadium. Yes, this company is a SPAC stock, and they have solidified themselves into an NFL stadium for the LA Rams. This is actually going to be hosting the 2022 Super Bowl next year, guys. So that tells me right now we may see a bigger acceleration these next 2 quarters for 2021 leading in to that Super Bowl, guys. Their products for Q1 2021, guys, was an absolute blowout as well. Accelerating product growth driven by growth in financial service products reached 3.2 million total products and 2.2 million financial service products in Q1 2021. Just looking at the last 3 quarters, guys, a 101% year over year growth, 113% year over year growth, and 121% year over year growth for their products, guys. This is absolutely stellar. Galileo accounts reached 70 million accounts, 130% year over year growth. Galileo was acquired back in 2020 for, I believe, $1.2 billion in stock and cash or something like that. But guys, the Galileo accounts have definitely accelerated the year-over-year growth on SoFi. This was a great acquisition. 100% year-over-year growth last 3 quarters. Just taking a look at the last two, 135% Q4 2020, and then a tiny slowdown of 130% Q1 2021, which is still absolutely stellar anytime you're getting over 100% growth. So guys, now looking at what they just did in their Q1, 2021 earnings report, the stock has sold off 40% plus if we look at that 1 month chart. So after seeing that type of growth, which is, in my opinion, that's the top 1% of growth in the stock market, guys. That is insane growth. Anytime you're talking about 50, 100, 130% growth, the stock has sold off almost 40% over the last month. So what does that tell you, guys? That is an extreme buying opportunity. This is giving you massive leeway cushion, guys, with upside potential price targets. Price targets are close to $30 on tip ranks from these experts on Wall Street. We only have 2 Wall Street analysts covering this stock right now, guys, but I believe that is going to be up to around 4 or 5 after these earnings reports come out, which I believe is going to be absolutely stellar. This article that we're going to look at on Warren Buffett, these articles come out every year, time and time again. So this one was put out, right when the market crashed last year. Warren Buffett, most people shouldn't pick individual stocks. Here's how to invest instead. So Warren Buffett is saying the average retail investor should not be buying stocks, guys. Of course, that is what we're doing on, SoFi stock right now. Investing legend Warren Buffett wants you to keep it simple and trust index funds when it comes to investing in your money. I don't think most people are in a position to pick single stocks, he said during the Berkshire Hathaway shareholders meeting. In other words, buy a low-cost index fund. Buffett recommends the S&P 500, which holds 500 of the largest companies in the US, from Google to Disney, ExxonMobil, and hold on to it for a long period of time. Okay, guys, we're going to look at what a 5-year outlook on the S&P 500 would have gave us if we took, Warren Buffett's recommendation, okay? So if you would have listened to Warren Buffett and invested in the S&P 500 over a 5-year time span, you would have almost had a 100% return on your money, almost doubled your money if you would have invested in this low-cost ETF. So taking advice from one of the richest men in the world, over $100 billion. And guys, he is not wrong. You could have doubled your money, investing in an index fund. But the thing is, I believe if you're a young, early investor and you're, 20s, 30s, 40s, you should not be investing in index funds. You should really be doing deep dive research on these individual stocks and picking, maybe 2, 3, 4, 5 companies you believe in for the next 5 years. We're going to look at just a couple of stocks doing very well today, guys. Shopify, 4% gain today. That's massive, okay? What would happen if you invested in Shopify 5 years ago and held your ground through all of that volatility? You would have had a 4,000 500% return, guys. This is absolutely massive. You would have literally almost 50x times your money rather than going with Warren Buffett's, game plan of investing in an index, playing it really, really safe. So all you got to do is do your research, and guys, you're going to be heavily, heavily rewarded long term. Ring Central, another amazing company, guys. This was acquired by Amazon. I believe this was an individual who went on Shark Tank like 10, 15 years ago or something like that. Pretty much the company got acquired by Amazon because of its massive growth in sales. 4% growth today. Absolutely amazing. If we look at the 5-year return, this is a 1000% return on your investment, guys. This is 10 times your money compared to Warren Buffett's investment strategy, guys. This is absolutely stellar growth. And look at this company, Square, 5.6% growth today, guys. This is amazing growth. If we look at the 5-year chart on Square, this was a 2,400% return on your investment, guys. You would have 24x your investment compared, to going with Warren Buffett's S&P 500 low cost index game plan. Roku doing decent today, almost a 3% gain, but a 5-year investment would have 14x your money, a 1400% gain. This would have smoked Warren Buffett's index. Guys, this is what I'm talking about. If you can hold through that volatility, as you can see in all of these companies in that short term, if you can hold through all of that volatility, of no price movement, just the company being flat, you're going to do very, very well in the stock market if you can just hold, guys. Hold on for dear life, guys. You have to hold. That's all you have to do when you find a company with absolutely stellar, stellar growth in the company, guys. The big money is going to shake you out. They're going to want to get in early. They want to get in at the bottom. All you got to do is buy the dips with them and hold through the volatility. And I would agree with Warren Buffett. Millions of retailers out there picking penny stock, pump and dumps, companies with horrible, horrible fundamentals. All you have to do is do the research, look at the fundamentals, and remember, price action on the stock does not necessarily reflect a company's performance and fundamentals, especially in a manipulated stock. So a company may be doing absolutely wonderful, and a stock could be doing the absolute opposite of just absolutely falling and falling, as we're seeing right here. Almost a 40% sell off in the SoFi stock. You have a massive amount of cushion right now, guys. You have 80% upside potential going off of Wall Street experts. This is what I continue to tell people. I tell people to don't fight Wall Street. Listen to Wall Street. Listen to their price targets because they're going to up them over time every quarter, guys. All of these companies that we're looking at for these 5-year charts, they have 20 quarters of proven growth. So they have reviewed their financial performances every time, 4 times per year. That's 20 earnings reports. What I want you to do, guys, is I want you to hold. So imagine holding SoFi stock for 20 earnings reports with this amazing growth that they are experiencing right now, these last 2, 3 quarters. This is going to gradually get increase and increase every quarter slowly, $5, $10, $15, if they keep up their company's performance of what they've been doing. So this is how it works in the stock market. Hold through the volatility. Give yourself a 5-year time span on a stock at the shortest time frame and see what type of growth you could experience. Right now, guys, this is one of the lowest valuations in the stock market with a company with this high potential growth. 12x valuation, very, very reasonable. If we can get to, 30 bucks, the valuation might be up to like, 25, 30x or something like that. All you have to do is make sure you do your deep dive research. I recommend anyone that has not done a deep dive on the SoFi stock, be sure to take a look at my other SoFi videos to give you a better in-depth analysis. And then also do research on the investor presentation on your own, just to make sure this company's fundamentals are proven. So I want you guys to know this is my personal opinion and why I believe Warren Buffett is wrong. As long as you do your research, you do not have to invest in indexes. You can invest in individual stocks. If you can hold through that volatility, you're going to make it long term and you're going to be a huge winner. And only if you feel this video gave you a better insight on the SoFi stock, please be sure to subscribe to this channel. And if this video does get 400 likes, I will do a double upload this week. I'll be keeping you guys updated on all of the SoFi updates when they come out. So please be sure to subscribe to the channel once again. And I hope you have a great day.